Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please give me a 5-star rating. It helps support the channel and it doesn't cost you anything. This content is brought to you by Uphold, which is a great platform that allows you to buy cryptocurrencies, sell them, trade them, and earn crypto. You can also trade between any asset. So, for example, you can trade between cryptocurrencies and precious metals and US equities, and you can do that very easily on the Uphold platform. And I've been a user of Uphold for years. They have 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. I've interviewed the founder of Uphold, the CEO of Uphold, and many other representatives from Uphold. So I'm a user of Uphold. I've been using them to buy XRP because it's the only exchange in the United States that allows you to do so. Other exchanges delisted XRP due to the SEC Ripple lawsuit. So Uphold is always ahead of the curve and they go against the grain. So it's a great platform that I highly recommend. And they have a very easy to use platform and app. So if you'd like to learn more, please visit the link in the description. Let's jump into the big news. 7 large traditional brokerages in South Korea plan to launch their own cryptocurrencies next year. Guys, you have people in the traditional financial world now looking to launch their own cryptocurrency exchanges. Want to guess which direction crypto is heading? Up. Higher prices. It's coming. The market cycles are playing out. I know we're in a bear market, but you see the building that's happening. We saw BlackRock enter the game, right? That's the whale of whales right there. And you have these different brokerages around the world, different institutions around the world launching some sort of crypto exchange, platform, app, solution, service, you name it. I mean, we've been covering it on this channel, and you have hedge funds and VCs raising millions of dollars to invest in these companies. So the infrastructure, the pipeline is being built for mass adoption, guys. And there's a big name involved in this group of 7 companies. So 7 South Korean brokerages plan to start crypto exchanges next year. Authorities in the countries have trending towards strict oversight since the Terra USD collapse. Well, that's no surprise. Terra Luna collapse, the stablecoin collapse. Of course, that's going to set up red flags and alarm bells, right? Even here in the United States. The firms have applied for preliminary approval and establishment of corporations to run virtual asset exchanges, the report said. Murray Asset Services, and here's the big name, Samsung Securities, are among the 7 firms, the newspaper reported, citing anonymous industry sources. Murray has established a subsidiary under its affiliate Murray Consulting, which is hiring technical staff for various cryptocurrencies and non-fungible tokens, while Samsung is studying how to enter the blockchain-based security tokens market, Newspim reported. At the end of last year, Samsung could not find staff to build a crypto trading platform, the newspaper wrote. Guys, Samsung Securities is a subsidiary of Samsung, the tech company that builds phones and all kinds of electronics, right? Look at what's happening here. You got these massive companies getting involved. The whale of whales, BlackRock, the largest VC firms and hedge funds. It's happening, guys. Adoption's happening, and all these folks see the money on the table here that can be made. They see what's on the horizon. We're headed to the token economy, everything on the blockchain, and you're going to have tokens for different assets, including digital assets and crypto and NFTs and CBDCs and stable coins and tokenized securities and tokenized real estate and all that jazz. So really big news. And here it says South Korean President Yoon Suk-yeol, if I'm saying his name correctly, took office in May and had promised to be more friendly to the crypto industry and nurture new projects. However, due to the collapse of stablecoin Terra USD, authorities have been more stringent, rating exchanges and flagging others for not registering properly. I'm not upset about that. You know, if people are not doing the right thing, go ahead and raid them and shut them down. If they are cooperating, they're registering, they're law-abiding companies and citizens, then, you know, you continue to allow them to grow and foster innovation. So The fact that big traditional firms are looking to enter crypto is in line with Yoon's easing of regulations, News Pim wrote. Guys, it's happening. Global adoption of crypto. And here's just another example. For us, it was BlackRock just a couple of weeks ago. For South Korea, it's 7 major companies, including Samsung Securities, which is, of course, subsidiary to the massive tech company Samsung. Now, a big reason why they want to get into this market, guys, is not only that, this is the future, but the money to be made. And here's a report from Blockworks it's actually from today. FTX revenue exploded 1,000% to beyond $1 billion last year. This is according to a report. Sam Bankman-Fried's crypto exchange FTX is reportedly on track to generate even more revenue this year despite bearish markets. Of course they are. The global adoption of crypto is exploding. You have cryptocurrency, digital assets, NFTs, DeFi, all kinds of different products now. And once again, these guys see the money on the table. Just like the dot-com boom, those who were early to the game, who built great technology, great platforms that actually solved the problem, they made a lot of money. Was there a lot of scams and a lot of nonsense? Of course. That comes with every disruptive technology, every market, right? It happens. Just look at the real estate market, right? What happened in the 2008 financial crash? You had a solid asset such as real estate, which people absolutely need, right? You need houses and so forth to live in. And they were building scam products and all kinds of shady stuff that collapsed the market. But my point is, don't be dismayed or don't be distracted by the FUD and some of the scams that may pop up here and there, right? You go back to the snake oil salesman back in the early days. Scams exist. Human beings do bad things, but they do good and great things, right? So you want to focus on the good and great, guys. Now, here's another example. Nike versus Adidas NFT revenue on the Ethereum blockchain. Nike made $185 million. Adidas made $10.9 million. And this is validated data. So it just shows what's happening, right? These companies are making money. These exchanges are making money. And, if you understand the market cycles, you can absolutely make money as well. Now, here's some other big news. PayPal has joined Coinbase Trust Network. So we're seeing acquisitions, mergers, partnerships, and the continued growth, right? You got these big companies setting up their networks, their advocacy groups, all kinds of things happening. So it's important to keep up to date because it shows despite what's happening with the price, adoption continues, building continues, the raising of capital continues. Now, let's talk about Gary Gensler and the SEC. Well, yesterday we talked about Attorney John Deaton's rebuttal or rebuke to Gary Gensler and his nonsense about regulating the crypto market. We know he has not put out clear guidelines and he's using regulation by enforcement, which is absolutely not the way to regulate a market. You need to put out the clear rules and they need to update the rules for crypto. And we'll talk about that. But anyway, Gary today tweeted out his Wall Street Journal op-ed that's titled "The SEC Treats Crypto Like the Rest of the Capital Markets." He says there's no reason to treat the crypto market differently from the rest of the capital markets just because it uses a different technology. Read my op-ed. And I replied, some of you may have seen that. I said, you are wrong. You have to regulate crypto differently. Tokens are distributed globally on decentralized blockchain networks. Many other countries treat crypto as virtual currency, such as the UK, Japan, Singapore, and so forth. While you want them to be securities to line your pockets and gain more power, you should resign. And we all know, guys, he's protecting the incumbent banks. This is why he has the nickname Goldman Gary. And, part of it is he's trying to, put up a strong face here, a facade, if you want to call it that, because he's going for the treasury job. We've talked about people at the SEC complaining that he has his own agenda. It's not even about enforcing the SEC's rules. It's about his agenda. And look, we've seen the conflicts of interest being revealed via the Ripple lawsuit. And with the Empower Oversight FOIA requests of Bill Hinman and the corruption that's happening there. So I wouldn't be surprised if Gary Gensler is continuing in that same path as Bill Hinman and these other guys. So this is pathetic. And even Mark Cuban, who, of course, he won a lawsuit against the SEC when they tried to sue him. Mark retweeted that tweet from Gary and said, "Come in and talk to who? Question mark. Set up an appointment. How? Question mark. You using Calendly these days? Question mark. Since you understand crypto lending / finances, why don't you just publish bright line guidelines you would like to see and open them up for comments?" Absolutely spot on. And a billionaire like Mark Cuban, a guy who understands business and tech and so forth, is calling out Gary Gensler. So once again, we are on the right side of history. Gary is not. And I believe he is going to be in a lot of trouble, like you guys saw in my interview with Congressman Tom Emmer, if you haven't, from a few days ago, where he said, once Republicans get control, Gary's going to be in trouble. He can't hide anymore. He can't dodge letters and questions anymore. He's going to be in trouble. So some people are saying he might resign. It comes to that, but we'll see. And but make no mistake about it, he's coming after all of crypto. Why do you think he hasn't approved the Bitcoin spot ETF yet? Bitcoin maxis. I ask you that question legitimately. He does not want the money to leave his Goldman Sachs buddies and JP Morgan buddies. He doesn't want the money to leave there and BlackRocks and so forth. He wants them to set up shop so the money goes through them. That is the legacy incumbent system, right? And they don't like being disrupted, guys. Can you imagine how much money and power they're going to lose? But we've seen it time and time again. They cannot stop the technology and the progress. Now, here, what's interesting, January Walker, you may say, who the hell is January Walker? Well, she's a U.S. Congress candidate out of, it looks like Utah here. And funny enough, she tweeted out today, or yesterday, I should say, the SEC should not be touching blockchain. And I share this with you guys, not to say you should go vote for her, but rather we're just seeing a lot more political candidates and members of Congress just awakening to the draconian rules and regulations and laws and regulation by enforcement that Gary Gensler is doing. People can see it clear as day. And I think his days are numbered. He may, he's not going to last long. And I think the Republicans are going to go after him. And I think but we're going to see more bipartisan support of Democrats joining Republicans to go after Gary Gensler as well. Now, let's talk about the digital dollar, central bank digital currencies. Today, the Digital Dollar Project tweeted out an article from Politico, which was just from, I think it was today or yesterday. And here's a quotation or a quote from that article. The House Financial Services Committee is poised to intro bipartisan bill in the coming weeks that will direct the Federal Reserve to research and develop a central bank digital currency, CBDC, a move Chair Maxine Waters, Democrat out of California, said assures the U.S. will remain competitive globally. This is what I'm talking about, guys. We're headed to the token economy. It is coming. Every central bank around the world will be building their CBDC. I think this is just optics. I think they've already been working on it. We've seen the conversations and so forth. This is not all of a sudden, okay, Federal Reserve start work. They've been researching it for years, right? This is all just the dog and pony show and yada, yada, and the public and mainstream and so forth. But if you've been researching, you've been paying attention to what they've been doing and meeting, which the average Joe doesn't really pay attention to that. And they really have no reason to, unless they're trying to learn as much as possible. We've been talking about this for years. They're going to do it. So even Politico is covering it here. And guess what? You're seeing bipartisan support for this, of course, because the U.S. knows that if China's digital yuan gets into other markets and folks start using it for trade and different things, the U.S. dollar is in huge risk of losing the reserve currency status. And of course, they don't want that. That's a big part of what gives the United States a lot of the power, a lot of the benefits, right? Having the world reserve currency. So crypto is going to play a part in this, guys. And while I am really not happy, or I'm a bit of a skeptic of the digital dollar maintaining our right to privacy, and I've talked to Congressman Tom Emmer and Chris Giancarlo about this many times in our interviews, I know this is inevitable, right? it's coming. We can't stop it unless we do some sort of like revolution, throw the whole government over, right? And by the way, I'm not advocating for that, so please, nobody flag me for stuff like that. If you're listening, United States Secret Service, FBI, CIA, I'm just talking about scenarios here. I'm not advocating for anything. But what I'm saying is, we can't stop this, guys. This is going to happen, and it's the token economy we're headed to. Could we opt out of it and use other things like Bitcoin and whatever else? Sure. But we're not stopping potential banks from building CBDCs, right? Is my point. So, well, what's bullish about it is when these governments release their central bank digital currencies, what are they going to do? Are they just going to throw it out and say, here's the token, the digital dollar? No, they're going to educate people, right? They're going to tell them, here's what's different about this. And here's why we're not sending you a check and we're depositing digital dollars into your account. And it's on the blockchain. And here's how it can be verified. They're going to educate the masses. That will have a positive effect for crypto and digital assets, guys. So hope you see what's happening here. Now, something that's interesting that came out of the EU today is that the EU crypto lobby fights the MiCA limits on US dollar stablecoins. The European Union could ban dollar peg stablecoins under its new MiCA legislation. Crypto lobbyists have warned. So this is kind of weird. I feel like this is just some infighting here, but the point is that every country is going to have the central bank digital currency. Sure, some smaller countries may use the US dollar, the digital dollar, or they may use the digital euro and so forth. But there's just a bit of interesting back and forth dialogue and battle here. Crypto lobby associations are seeking clarity from the EU legislators over incoming restrictions on foreign-dominated stablecoins. Euro-backed stablecoins are not yet alternative as they represent a tiny share of the crypto market. So it's like, a matter of jurisdiction, but overall, guys, the future, where we're headed is that these stable coins and these CBDCs are all going to be in every market, right? It's going to be like, once again, 24/7 trading on the blockchain, 24/7 markets, and going in between and out of different CBDCs, using CBDCs to go into crypto and vice versa. That's what's coming. So all of this stuff that's happening now is just maybe some political grandstanding, maybe, virtue signaling, maybe just we're still early and people are confused. There's back and forth. But look, I think we all know where we're headed, right? And that there's going to be people in Europe that are going to use the digital dollar, and when maybe they'll do some currency arbitration and all that stuff, right? Just kind of like what's happening now in the FX market. So we'll see, but just it's something to be aware of that this is happening in the EU. But we know what's coming, guys. CBDCs, they're going to be sent to the people, and that's how you're going to get your stimulus checks, your tax returns, all that stuff. They're not going to, use checks and cash anymore, guys. We're going to go to a full digital economy. So that's what's coming. Anyway, guys, let me know what you think. I certainly think these traditional brokerages in South Korea, including Samsung Securities, looking to build crypto platforms and exchanges is very bullish news. I hope you see what's happening. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.